Like I am practicing, and I am putting heavy weight on myself to be a lot more sharper. Sharper meaning I shouldn't enter a lot of things. I want to minimize losses, right? And in order to minimize losses, we have to only go in A setups or A plus setups. If they are not that, then we should pass, because we have the ability to be able to scour the market to find A plus setups. And if they're not there, we should be in chill mode. So I am adopting that and trying to stick to that. It's kind of tough for me because I'm trying to satisfy the community in every which way, day trading, scalping, and swing. But I think I will find my momentum on that. So, but I have to minimize the losses. That's what I have gathered when I go through my lessons and losses. That's why I use the lessons and losses channel for my journal, right? On top of my Excel journal, right? I like to go in the Discord, the lesson and losses channel, and check me out, right? Check out how much am I losing throughout the week, right? How many losses, right? I need to see that, right? And I put it there just to be on blast, right? I hold myself accountable. That's how I hold myself accountable, because I utilize the lessons and losses, right? I want to show my losses. I'm not hiding anything. I want to be better at this. And in order for me to be better at this, I have to put it out there. So what I did notice in that lessons and losses channel, we are going to take some losses in this activity. We are. There's no trader who doesn't take losses. We have to make sure, put every effort forward to take minimum losses, though, minor losses, right? Opposed to our wins. That way we can stay in the game longer and grow our account. If we're taking equal size losses as our wins, we won't make it. That's not sustainable. We'll be out of here, continuing to put money in the account, and that's not what I'm trying to teach in our community, right? So what I did notice is, going through my lessons and losses, my losses has been minimum. The size of my losses is minimum monies, $15, $20, $30, $50. So my wins has accumulated more amount of money than my loss amount of money. So I like that. When I went through, I took that, and I was kind of proud of that, right? But I want to absolutely minimize the amount of losses that I'm putting in there. All right. So I noticed yesterday and today was my latest losses, and prior to that, it was the beginning of last week. Not too bad when we trading every day, right? So but I want to minimize those. Today's meeting, I just wanted to go over a few important pieces to what we do. We participate in stock options contracts, right? We buy contracts of prices that we think a stock will go to, right? Whether that stock goes up or down, right? So this to the right is a options chain, right? Every brokerage, well, not every brokerage, you have to apply for stock options trading on a brokerage account, right? So you have to. I have a document. I have a document of how to open a brokerage account on the Discord. It is in the Discord channel, Options 101. Right at the top, it is a PDF, how to open a brokerage account. So we have that there for anyone who doesn't have a brokerage account open. So you should immediately first go there and open a brokerage account and attach stock options to it, right? And then you would see in that brokerage account this options chain. This is what we refer to in the community when we are purchasing contracts, or this is what the watch list is referring to for the stock that we are looking to take advantage of. I have a video of going over this options chain in depth in the community as well, under Options 101 in the Chart Party channel, right? But I wanted to show the direct correlation between our contract, our stock option contract. We have up, this is the SPY, right? This is an asset that we can buy a stock options contract for, right? And I wanted to pull up the relationship between the chart, so the stock chart. And again, this chart I have up is via a software called TradingView. I have a video up in the community for how to download. It's a free software, TradingView, so you can visualize the stock prices. That's all the chart does. It shows you the stock that you're looking at, the price range, right? From the highest price that it made to the lowest price, the dates, the times, as you see at the bottom tab when you're scrolling right to left. All of these candles represent depending on the time frame you're on at the top, it represents that time frame, right? So with that, again, I have a video everything that all of the features that you're looking at on this stock chart. I have a video going in depth of the things to learn and what I use and what they do. I have a video. You should watch that if you don't know about stock charts. But I wanted to just pull up this chart in relationship to this contract, this options chain contract, right? Because the two go hand to hand. So when we are saying, hey, I'm looking at a SPY 688 call contract. So this is a SPY 688. This is the level that we're saying SPY will go to, a price level that we're saying SPY will go to, 688. SPY is currently at 687.39. That's the price of a SPY share. So again, stock options is us purchasing a contract and saying that that stock is going to go to that price, whether the price is higher than the current price or lower than the current price. And that contract is this right here, this line, right? Whichever line, depending on the price you're seeing that this price of the stock can go to. Okay, the right side is put down. You're seeing that stock that you're looking at, that price, if you're buying over here, you're saying that price is going to go down, right? You're buying a put contract, put you down, right? And then on the left side, you're saying that stock price is going to go up. This is the call side. You're saying that stock you're going to call it up. It's going to go up, call you up. So contract derives from this center, which is the strike price. All of the contracts, whether a put on the right side, derives from the center. Center is the price that you're saying that stock is going to go to. The ask is the price that they're asking you to buy that. The bid is the price that you're going to sell it for. I have a in-depth, thorough video on all of these different things. I just want to walk it over just to show the relationship. That's what I want to be adamant about, right? Because I think that's the core piece of stock options and participating in it. You know, you're going to go here to purchase a contract. You know, the ask price is what you're buying that contract for, right? The bid price is what you're going to sell it for. And the price of what you're saying that stock is going to go to and where that stock is currently. So again, SPY is at 687.39. If we go on the chart, on the daily right here, you'll see that this chart by closed right here at 687.39. So now this chart, I teach how to look at chart to know what possible price the stock is going to go to next. You need to, I teach that, right? So looking at this chart and seeing the level, this is a level right here at 673, and this is the high level at 689. So I'll label that real quick just to show us something real quick. I want to show what is the relationship of this chart and this contract. So if we say SPY, I want to buy a SPY 688 call contract. So that would be this contract. They asked me to pay $17 for this 688 call contract. Now SPY is at 687 right now. So 688 would be 1 point above where it's at. 1 point. So we're saying that SPY will go up 1 point. All right. So with that being said, you buy to go up 1 point, right? That would help your contract. That would help you win on that contract. How you win on that contract is you bought this contract for $17. If that price goes up to where you're saying you want that price to go to, that contract will then be selling for higher than what you bought the contract for. So once that price get there, let's say that same contract that you bought for $17, when that price goes to where you said it was going to go, that then contract is selling for $30. Now you can sell your contract for $30, and that difference is your profit. That's how we get paid on stock options contract. So it's the difference of what you purchased that contract for and the price that contract is going once it goes toward or goes to the price that you said it was going to go, right? Now, the difference of how much you can make depends on the speed that price goes to where you're saying it's going to go. So if it takes longer, then you're just inching up. You're just getting minimum return. If not, you could be losing too, just by it going sideways or taking a long time to get there. So that's important to know as well. That's why on the watch list, we show best entry level. We only want to purchase something at a bounce level, right? So we call out levels for us to buy that contract at, okay? So that is the importance of those levels. Those levels are there to give us a guardrail, right? So we don't fall off the cliff or that stock goes opposite the direction we're saying. We won't lose too much. We should not lose too much. So that's what the levels is, all right, on the watch list. But that's a general gist of purchasing the options contract, how we get paid from an options contract, right? And the chart, the relationship. The chart is important because this way I need to see my levels. When the watch list said, hey, I'll put a level right here, I'll make it red. Hey, this 683 level, we want this stock come back to this price level, 683, and then we're gonna buy a 684 call. So that's saying when this thing touch this level, go ahead and buy your 684 call. And as you see, that's what a bounce is. So that's why this chart is important.